Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, March 11, 2009. We begin in Australia, where the Westpac Melbourne Institute Consumer Sentiment Index fell by 0.2% in March, which was a marked improvement from the 4.5% decline seen in February. That comes despite consumers being bombarded by a stream of negative news, including a deepening global recession, a worsening job market, and the Reserve Bank of Australia holding rates steady, which surprised most commentators. In a second release from Australia, there were 3.5% more new home loans in January, which was smaller than expectations and about half the level seen in December. In Japan, private sector machinery orders, excluding volatile items, decreased by a seasonally adjusted 3.2% in January. That was a smaller fall than anticipated by economists, but is still the fourth month in a row that orders were down. That is the longest losing streak in at least 20 years. Orders from abroad faltered, adding more evidence to a retraction in global trade. In a second release from Japan, the corporate goods price index was down 1.1% on the year in February, accelerating the drop in prices that breached into negative territory last month at negative 0.3%. On the month, prices were down 0.4%. The Aussie-Yen pair, which had a strong gain yesterday, fell back in overnight trading, declining about 100 pips from a high near 64 to find support at the 63 level, which corresponded with an upward sloping support line. Prior to the New York Open, the pair rallied but was unable to breach its high from earlier in the global session. In the New York session, the pair fell back down as the risk aversion reared its head again. In Germany, producer prices slowed for a fourth month in a row in January, with prices down 1.2% on the month and the annual rate cooling to 2%. The drop in the monthly figure was much larger than expected and reflects an attempt by companies to cut prices in order to stimulate demand, which has been eroded by the global slump. Lower oil prices were also a factor. A second report from Germany showed manufacturing orders plunging 8% in January and down 38% on the year. The global recession is choking off exports, as export orders were down 11.4% on the month. The UK trade gap widened to £7.7 billion as exports to countries outside the European Union plummeted by 16%, with those heading to the US down 8.5%. The trade in goods deficit was larger than expected. The euro-pound pair continued its advance, the fourth session in a row that the euro has gained on the pound. The pair has climbed 400 pips since testing an upward sloping line of support last Friday. The pound is being pressured by its banking sector, the beginning of quantitative easing by the central bank, and a weak result from the housing sector, which showed that the average number of transactions in the quarter through February fell to their lowest level in three decades. The pound-yen pair continued its decline as well, falling for a fifth session after failing to break through resistance at the 141.20 level for a third time on March 5th. Today, the pound set a low slightly below the 134 level after a more than 200 pip slide from its intraday high at the start of the session. The euro-dollar pair slid overnight to the 1.2615 level, but then rallied in late European and early New York trading to the 1.2815 level. That was a 200 pip move from low to high, though today's rally stalled at the same level as yesterday. European stocks managed to turn early losses into gains, and U.S. stocks tried to hold on to yesterday's gains, which were the largest in nearly 4 months. The dollar-yen pair, which was trading sideways to begin the week, moved down in favor of the yen today, breaking below an upward sloping line of support that has been in effect since mid-February. If that break signifies a further drop in this pair, will become clearer as the rest of the week unfolds. Today, though it was too late for this broadcast, the Reserve Bank of New Zealand was expected to lower interest rates to 3%. Also, New Zealand was scheduled to release data on manufacturing and food prices. Japan will post its second release of fourth quarter GDP, and Australia reveals its employment change and unemployment rate. Overnight, the Eurozone will release its producer price index, and Germany reveals data on industrial production. Tomorrow morning, the Swiss National Bank will decide on interest rates. Currently, rates are at 0.5%, and expectations are for a 25 basis point cut. In the US, there are 3 releases. weekly jobless claims, retail sales, and business inventories. And that's the Forex recap for today. Thank you for joining us here at cmsfx.com, and happy trading.